LLC, dealer, and member of FINRECIPIC, or of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Got out of Roku. I got into a little bit of Bank of America that I'm keeping them pretty light. I got out of Microsoft. There's a position disclosure. Okay, S here after hours. I honestly haven't even looked at the numbers. I just read. Was just kind of trading the price action. Did anyone post the numbers? Looks like they're being conservative. Guidance. Penny. Beat quarter. Pat, you got numbers for S? Got revenue down slightly. Got revenue down slightly for the year. Echo on YouTube. That's bizarre. The thing that I always do to get rid of the echo on YouTube. I did. Is there really an echo on YouTube? That's going to be a disaster. I had to do all these updates today. So I have no idea what would be causing that. YouTube, that's going to be a disaster. I had to do. What about now? Did I just fix it by any chance? No, it didn't fix it. Interesting. Let me try one more thing here. What about now? Did I fix it now? Whoa. Did I fix the echo now? We good? All right. Okay, I figured out what the problem was. All right. I gotta keep an eye on this S while I do the meeting. Penny posted the numbers for me. Thank you very much. Beat on revenue. Guidance is most important. Little light on revenue. Q1, just like you said. Gross margin's not bad though. Margin's so important right now for these companies. And the fiscal year guide rev's a little light, but it looks good. Looks good outside of that. And those are pretty small misses on the revenue there for S. Oh man, I can't even see my dots on this chart. Oh, there it is. Boo! It's me getting lit up down here on the bid. And then sell. Not bad. Some more detail from Penny. Cool. Appreciate that. I will take a closer look after the meeting. All right. Let's jump into it. So yeah, what a wild day today. It's a wild day, especially considering that CPI basically came in line. It almost seemed like that CPI number might not necessarily matter, and we could just go back to our banking crisis like normal. I think core was slightly hot, but basically we came in line. But the thing that I was saying coming into 8:30 and then after the number posted was that it seemed like the whisper number was hot. There was a lot of banks that were expecting CPI to come in a little bit higher than kind of that consensus expectation. I know Goldman, as an example, I think was one of them. So when that number came in line, I viewed that as bullish. And I also viewed that as a potential continuation of yesterday's trade, which I didn't think was done on the bounce. I thought that we sold off yesterday afternoon specifically because of fears of the CPI, and otherwise we would have had a much actually stronger day yesterday and stronger close yesterday. So I'm thinking Inline CPI with a hot whisper number should generally mean that this market can move a little bit higher, in conjunction with my broader thought process that I thought that this market could further price correct back up. So with that said, that was kind of more of a thought process. The technicals of the market were telling us to be a little bit more patient this morning. One, because we were set for a pretty big common gap to the upside, and we always want to see how the market handles those gaps. And two, was that even though I have a thesis that I think that the market can continue to work its way higher, because I think the degree of the market sell-off from the SVB blow-up is overdone, we have to listen to our technicals. The market was set to open up at around 390. Yesterday we were at 380. There's resistance at 393. It doesn't set you up with a fantastic risk reward to be buying off the open, especially without small time frame confirmation. So that was the big thing that I wanted to see early in the day, was small time frame confirmation. I wanted to see how the market handles the gap. And whenever we have these big gaps, there's a number of ways in which it could happen. One is you could just get vicious momentum off the open that goes to the upside. That's a lower probability situation, and it typically can't last. Two, which I think is actually the most bullish scenario, is sideways price action for about a half hour or so. It lets these moving averages catch up, and then you can see if you can go into some sort of upside grind or get some sort of upside continuation. Option number three, which is also, I think, decently bullish, not the end of the world, is a combination of time and price correction that goes for 15 to 20 minutes, where you don't have a heavy, vicious sell the gap moment, but you kind of grind lower a little bit in the first 20 minutes as the ADMA is catching up, and then you look for a pivot point to come into the ADMA on the 5-minute chart to give you continuation. Or our final scenario is you get that gap up, and we saw a lot of this, I feel like, at the end of last year. You get that gap up, and then you get that heavy sell-off in the beginning of the day where you're left with a price correction, but it's with a big negative Maribozu. A lot of times that pretty quickly leads to a gap fill, and then sometimes they overshoot that gap fill to the downside, and you get selling continuation. So whenever we have these big gaps, generally I think patience is in order. Once in a while, if it's a big gap in really extreme territories, like yesterday, honestly, with like a big gap down, I think you can look to be a little bit more aggressive as a counter trend trade. But on days like today, where you don't have extreme daily chart extension in either direction, I think that you want to try to be a little bit more patient off the open, see how the market handles the gap. So, the first half hour of the day, we had a couple names that were relatively strong, like Roblox, that we were looking at. And I think some of you guys did really well with that Roblox. So if you were one of those people, congratulations. But I think early in the day, what we really wanted was patience for that first half hour or so. And then it was around this 9:55 a.m. period when this ADMA was finally catching up. We had a very tiny price correction off the 9:45 shooting star candle that I thought, maybe we can actually get a little bit of continuation, and that continuation was kind of disappointing, honestly. Sorry, I should use a different chart. I had to switch over to that one real quick. Let me use this chart because it'll stay locked on whatever my focus is. So again, it was really at this time that I want to see the continuation, and I got it a little bit. It was kind of grindy. There was certainly relative strength that seemed to be coming into mega cap tech stocks, which we can take a look at in a second. But yeah, the upside continuation, it came in at the right time. It was certainly grindy. It topped out at around 11:30. I thought that this pullback didn't look great here. We had some kind of headlines hitting at 1 o'clock. The sell-off was deep. Breaking the opening lows was not good. And then by early afternoon, I was actually starting to become concerned. We were now below the opening low. Tried to create this little bit of a rally here, and then particularly at 3 o'clock or just after 3 o'clock when we were making new lows, I was becoming very concerned. Because now, if we got to close on lows, then we got this tremendous rally into the close, which I'll get to in a second. If we closed on lows, it would have been a really bad candle. Lows is like 387, so I'm having a false tail down here to 385. But just imagine a solid red candlestick that starts at highs at this ADMA, which by the way is at 393 area where we expected there to be resistance this morning, and closes at 387. You don't have that major downside extension anymore. You're having previous support act as resistance. You're closing at lows. That would look really bad. Instead, we got this incredible rally into the close that's giving us a little bit more of a doji type candle here for the SPYs. A little bit of a tail into that resistance. An ideal situation for bulls would have been a close above resistance. That didn't happen. But a little bit of a tail there above resistance, but also kind of a big downside tail. So it's a doji. I think this candle is showing us a degree of indecision right now. And we'll see. My thought process still is that we can continue higher here. I still think that the big banks are a buying opportunity. I still think that tech is a bit of a buying opportunity right now. The regional banks I'm still very scared of. But let's take a look at our other indices real quick to see if we have confirmation from them. Let's start with the strength. The strength is in the Qs. The NASDAQ, it doesn't even look like anything happened. We had like a false breakdown yesterday below this 287.50 to 288 support that we've been consistently talking about. But we closed above it yesterday. We got continuation today. We're working our way towards 300 resistance, which is the top of this range, and we closed on highs. The Qs look great. It was the same thing. I was a little bit nervous at 3 o'clock here that we were closing below these opening lows, and we're going to close on lows. And for the Qs, that might have left a shooting star candle in no man's land, granted in no man's land, but it would not have been a great daily candle. And instead, we got this rip your face off $4.50 rally from low of the day in Qs to high of the day in Qs in 45 minutes here, which is just completely wild. But that's where the relative strength is. You look at stocks like Apple with the cash that they have on the balance sheet when you have all that fear that's in the marketplace right now. You look at things like that, and you just you can't be surprised. You can't be surprised that Apple got bought back as well as it did. But now we take a look at the IWM, and the IWM is concerning to me, and I was expecting more out of the Russell today. This is my big disappointment of the day. Obviously, we've seen this consistent relative strength in the NASDAQ. I expect that to occur. I understand the rotation into safety, which is Apple's cash balance sheet. But I thought we would see a little bit better price action from the XLF today, and I thought we would see a little bit better price action from the IWM. I really thought we would see this IWM get back to 180 or low 180s today, and it just was not able to do that. So I've got the Qs that look, I think, fantastic. The SPYs that look okay. They'll look a lot better if we can get a close above 393. And I got this IWM, which still kind of looks like a flaming pile of trash. Not given a great close. I guess there's a little bit of a downside doji. There still is some extension of the downside, but we're still not really getting our full Russell confirmation that we would really want to see. So that's the market. Tech, sorry, I'm getting filled on a position, but I can't say what it is because I'm on YouTube and I'm not allowed to say if I'm buying or selling stock when I'm on YouTube. So you guys just have to use your imagination. Anyway, tech has been where it's at. Apple just continuing to show really good strength today. It was not a major focus of mine today, but I'm happy that it was able to hold 150. Microsoft, I liquidated my Microsoft, or the remainder of my Microsoft position into the close today. Above 260 resistance. I mean, come on. This thing just looks absolutely fantastic. Yeah, Meta with the news this morning. This is one of my favorite ones out there. As they continue to do that cost cutting, you just got to recognize that this is a cash flow powerhouse of a company that, made probably a not so great bet with that metaverse, but their underlying business, Instagram, the social media addiction is just a cash flow business. They got upgrades today. They got new layoff announcements today that the market liked because that's the biggest thing is the cost cutting with this company. And thing was stellar. This is the one name that I'm upset with myself for not buying yesterday because I bought pretty much everything else that was on my list yesterday morning, but I did not buy this one, which was on my list. And now, look at that move, 175 yesterday morning, 195 into the close today. Really, really impressive. Amazon and Google still some work to do. We mentioned having alerts out for 95 resistance area for both of them. Amazon got up to it, still has work to do. Google had a decently strong day also, but also still has a lot of work to do. So that was kind of a lot of our mega cap tech stuff, which has been really leading. I guess take a quick look at Tesla. That's the only one I didn't look at. Yeah, Tesla had an impressive bounce back day also. And I apologize because I said I didn't like this one in the morning meeting today. So I hope I didn't scare anyone off who otherwise may have been involved in it. I think I mentioned in the morning meeting that if the bounce could continue, but I prefer this thing short to long in this like 182 to 186 area if it gets up to it, and it did get up to it, but it would just really, really strong follow through from Tesla. Some other stuff we were looking at, CrowdStrike was on the list today. CrowdStrike for an inside day and up, back above 120, which had been a key level. Name looks great to me. I thought that earnings report was great, but like we said at the time, it was just a little bit ahead of itself into the report. So the pullback made sense, and then it pulled back deeper than I think it would have otherwise just because of market weakness, which gave an opportunity for people to revisit that 120 level inside and up from yesterday into today. Made for a really solid trade. Roblox was another one, continuation of the bull flag. First of all, Roblox was a call out from yesterday, so I hope some of you guys have it from yesterday. Yesterday morning meeting, we talked about buying Roblox back through the previous day's low, so 39.15. Anybody could have very low risk stock where you are now, $4 in the money on the thing. And then today we were looking for a degree of continuation in Roblox from the breakout of that if we could have market support. And the market support I think was mediocre. It was good off the open, but then faded. But Roblox, yeah, some decent continuation. So that was some of the stuff on the list for today. I think the list was small. Uber ended up kind of failing down. That was on that list also. And then the banks were difficult. This JP Morgan, the intraday action on the banks was difficult. I guess JP Morgan closed great, which I'm just seeing that. Wow, what a stark contrast between Bank of America, which is the one that I got myself stuck in today, albeit I'm light, versus JP Morgan, which I'm kicking myself for not being involved in JP Morgan because this has been the focus. JP Morgan's been the one that I've liked best. It was the most relatively strong, first to go green on the 10th on Friday. Yesterday was one of the strongest out there, giving an inside day. And then this morning, it gapped up to the 80 MA, so fine, they sold it off the open, but this thing still was holding up best. I know I called out one long, I think, versus the 950 low, which eventually kind of failed or shook out. But this one has really been kind of best out there and still closed really well, as opposed to this Bank of America that closed very poorly. Goldman was a better one if you were looking for longs off this pivot down here at one point today as well. So, interesting market environment. I kind of am really enjoying the price action, to be honest. I'm enjoying the volatility. The price action has just been making a lot of sense to me generally, which tends to be when I do best. So, yeah, a lot of movement, but it seems like it's generally been pretty logical for the most part. So that's been making for a lot of opportunity, and I think that's pretty much it. That's pretty much all I got for you guys today. So, happy to answer any questions that you guys may have. Let me scroll up in the VTF, see if I missed anything. Feel free to post on the YouTube. Feel free to post in the VTF. First thing I'm seeing here is from DJ. Suppose you take a cheat on an inside 5 setup, then double your position once you get confirmation. This is a great question. Do you take your 1-to-1 on both entries, or just the 1-to-1 on your final position, which would mean your average price? So for example, are you considering them 2 separate trades? Also, when you enter a trade, do you always put your stop first, or do you sometimes put in a limit order to first cover your 1-to-1, or does it depend upon the price action? Sure. So in regards to your first question on the double entry, and then what do you do on your 1-to-1s? I don't always do it the same way every time. I think that both of what you're saying is correct. You could treat them kind of as 2 separate trades. where you do a 1-to-1 on the cheat, and then a 1-to-1 on the real ad. So you could do 2 offers, or you could do one based on the average price. I think a lot of that depends on how much you were able to cheat by. Like sometimes your 1-to-1 on your cheat, if you do it in a certain way, if you had good pricing, and it's a wide-ranging inside bar, the 1-to-1 on the cheat can almost be happening before you even execute the ad, or even at the same price, in which case then it doesn't make that much sense. So that's when I'll do it kind of based on the average price. I probably do it based on the average price more often, but I do both. I also don't necessarily always take the same amount of stock in both. Sometimes one buy is heavier than the other, so I got to keep that in mind as well. So I wouldn't say that I necessarily have consistency with which approach I do. I think both are correct. I think which game plan strategy that I use specifically depends on the situation. The one thing I would say about it, in order to have consistency, is that whichever kind of game plan that you do choose there, that you stick with for that trade. I think that's what's most important. But I think either is technically correct. Also, when you enter a trade, do you always put your stop first? That's what you should do. Note my words. That's what you should do. You should always put the stop. You know, always focus on risk first, and then focus on the reward side of things. Next is from Kyle. When buying Tesla, I really liked the inside day setup. Inside day? I assume that's what ID means. I like the ID setup, as it was pivoting off the ADMA at 950. You gotta tell me what ID means, because there is no inside day. What are you looking at? 950? Oh, intraday setup. Okay. When buying Tesla, I really liked the intraday setup, as it was pivoting off the ADMA at 950. I remember you guys, a bunch of people got pushed out of this, or at least a couple of you guys did. I like this long off the 850 low. I just don't like Tesla or Tesla's daily chart. But from a 5-minute chart perspective here, really strong off the open, gets extended, kind of similar to the Qs, gives a little bit of a technical pullback, gives a continuation hammer off the ADMA. I really like this long as a small time frame trade setup. I just wish I liked the daily chart better. Let me read the rest of your question. Daily looked to be in a tough spot. Was going right into the daily ADMA, so because of this, the daily intraday misalignment, I sized in less. I love that. Is this the right mindset? Yes, that is absolutely the right mindset. And again, you want to be thinking about it in terms of dollar risk. You know, if you've got the sun and the stars and the moon all aligned, everything's there, that's when you want to take more dollar risk. If you, like in this case, you got something that you really like on the 5-minute chart, but something that you don't like so much on the daily chart, that's a layer of probability that's against it, then you would take lesser risk. So that is exactly the right mindset. Also from Kyle, a little follow-up here, was also curious on any thoughts you had for what the best things to do during the middle of the day for newer traders. Most days I usually stop trading around 11, then I spend most of midday reviewing opportunities from the open, and then reviewing other previous setups from the week. I was wondering if there was any other ideas you had for newer traders to implement during midday when it is slow. Yeah, so I love that. I love the question. You know, some days there is a lot of opportunity midday, and then you want to be a little bit more active, but most of the time there's not, right? Most of the time there's not. And the statistics that I've seen show that as a group, we tend to give back the most amount of P&L in the midday. So definitely generally a time to do less. It's also why it's the lowest probability time of the day. So what to do during that time of the day, because we don't want to be too idle. There's always ways that we can improve, and there's a lot that you can do. I love what you're saying here as far as trade review goes, and then for me outside of that, it's just research. Reading everything I can kind of get my hands on. I do listen to podcasts and stuff like that as well. There's obviously a lot of trading books out there that you can be reading. So stuff that kind of keeps you in front of the screens just in case something happens with the market, and that way you're able to continue to manage your open positions that you have, but at the same time you're focusing on something else that is helping you to not overtrade the midday session and also, you know, further advancing your learning and your education. There's a lot that you can do. And I don't like when people tell me that they don't have anything that they can do midday or whatever, because there's so much that you can do to improve as a trader. There's so much that you can read. If you didn't finish reading Pat's note, you can go do that. But yeah, great question. From Denver Steve, depends somewhat upon the price difference between the entry prices. Yes, I think that goes back to DJ's question about cheating on an inside 5 and then having the bigger ad. So it's going to be, you know, each circumstance I feel like is a little bit unique, and that's why I choose which game plan that I do. And some of that is related to the price difference between the entries, for sure, for sure. Cool. What else, guys? What else? 441. We definitely got some time here if anybody else has any questions. Don't be bashful. If you have a question, help somebody else. I promise your question will help someone else, no matter how beginner or how advanced the question is. Been reading Peak. This is Kyle. I've been reading Peak by Anders Ericsson. Gives a ton of insight on deliberate practice, which I've tried implementing into trading. Cool. I'm not familiar with that one, but appreciate the recommendation. Thanks, Robert. We've got 2 Roberts in the in the YouTube. Robert D is saying, always ask as many questions as possible. Robert knows. From Steve, learned recently that some retail brokers trigger stops off the bid for option and ask for equities. Assume at T3 always triggers equity stops off the ask. No, it's off the print. You need to print. You need to print at the price of your stop. So I've had it happen, not often because it would be a very unusual circumstance. I've had it happen where I've had stocks actually spread through where my stop is, but no prints go off, and then spread back down and never trigger my stop and have the trade work. It's happened a few times ever, where I'm watching the tape and I'm like, oh wow, that inside bid is below where my sell stop is, and my stop never triggers because a print never actually goes off at or below the price of my stop, and that would obviously be for a sell stop on a long. So I'm not familiar with what the retail brokers do. They are probably full of tricks. I don't trust them. But I can tell you, at least for my trading here at T3, for my account, there has to be a print that goes off at the price. From Ricky, did I start some BAC today? The answer is yes. I'm in BAC, was in my position disclosure. I am very small right now. I'm just keeping an eye on it, and I'm annoyed at myself that I'm in BAC over JP Morgan, but buy the ticket, take the ride, right? Buy the ticket, take the ride. What else, guys? Whoa. Is bank out of wood yet? You mean are the banks out of the woods? Probably not. Not based on the price action, at least. They got a lot of proving themselves to do. Obviously, there's a lot of chatter on mark-to-market accounting with the big banks, but my thought process that I've mentioned is that I think the big banks are just fine. The regional banks scare the you-know-what out of me, and I would recommend avoiding them. You don't want to be me. It sounds like everything that I'm hearing, anecdotally and otherwise, is that there is a rush to pull money out of small banks and a rush to put money into big banks. And guess what? We said that yesterday morning, and now we're seeing it come through. It just made logical sense. People are concerned, which the Fed backing things should mean that they're not, but I guess they still are. People are concerned about credit risk of the bank that they're working with now. It's like I was half joking around yesterday. You gotta almost do a credit check on your bank before you put money in with them. So it sounds like there's a lot of big players out there who are taking their money out of smaller banks and putting them in bigger banks. Which again, that anecdotal evidence should be really good for some of these XLF names. Ricky from Mr. Baba. I had red day today and I clawed back from negative 12,000 to negative 2,000. I feel pathetic at the moment because this was my first red day in 5 weeks after being patient, disciplined for so long. I could go down this bad. I had never imagined. What went wrong? Lack of sleep and disruption of my morning routine, no pre-market prep, and on top of that, I had internet and platform login issues when I started. Hence, I started forcing trades. Old demons were back in a heartbeat. By the time I realized I was tilting, I was already down 12,000. Took a break at this point and walked away and accepted the loss. Thankfully, the market gave me the opportunity to come back from the hole. I do know not every time there will be an opportunity to come back to life. And if I don't respect my stop losses, it will be wiped out very soon. But not sure what are all the guards I can put in place so as to not end up in this situation in the first place. If I was in my senses today, I would not have traded at the first place, but clearly my head was not in a correct place. Today's experience goes in the books to keep me away from behavior in the future, but any advice you can provide for me to avoid this kind of behavior is much needed. So first thing I would say is I really appreciate you kind of posting this op-ed confessional, putting yourself out there like that. First of all, congratulations on the consistency that you've had up the route today. But I have seen it happen with too many traders over the years, guys who are very consistently profitable, seriously very consistently profitable, but it's that one day that they throw in there and, again, this is always a numbers game, right? There's a lot of ways in which you can make money in this business where the numbers come together where you come out ahead. There's also a lot of ways in which you can make money in this business where you don't come out ahead. And consistency is great, but it's also about, your maximum downside versus your maximum upside. And what we generally want to see with the real goal is to be consistent with your approach, but have your up days be bigger than what your bad days look like, right? And over the years, I have certainly seen people where it's the opposite. I've seen traders who make money, 3 to 4 days a week and would still consistently lose money because that one day of the week that they're down would be, they could never control the downside. It just really becomes a multiple of what they make on the upside. If you make $200 4 days in a row and then on day 5 you lose $1,500, well, those numbers, the math just doesn't work out. Even though you could make the argument that I'm a consistently profitable trader, not consistently profitable enough, I guess. Sorry, just let me fix something here. So it's really hard, because the discipline that you have to have in this business has to be like consistent day in and day out and day in and day out. I can use a story for myself. It's very recent. I've been trading great. I'm having a phenomenal 2023 overall. I absolutely crushed it in January. And, this SIVB loss took out a really big chunk of my year, assuming that it's a 0, which maybe it's still not. But it took out a really big chunk of my year. So I was texting with T3's CEO, who, between us girls, he's probably not listening. He's like usually not. And I just got a missed call from him right now. Oh my God, is he Is he listening to this meeting? So I was texting with T3 CEO, and I was like, oh man, I can't believe this happened. I just gave back like so much of my year. Like I'm really upset, whatever. And his response was something like, it can be very easy to lose discipline on one day and have it wipe you out. I was like, oh, thanks a lot, Sean. Because I really didn't think I was being undisciplined with the trade. I kind of think I just maybe it wasn't something that I shouldn't have been in. But I knew what I thought I was risking, and it was not a 6-figure number, and then the thing got halted, right? But the point of my story is really his response more than anything else, because it's actually completely accurate. I don't really think I was being undisciplined in taking that loss, but one day of being undisciplined can wreck a month of trading, and that I've had happen actually, not anytime recently. But I have certainly had it happen where I had one individual day over the course of a decent month, and that one day literally ruined the entire month, and I was just undisciplined, didn't manage my risk properly, and hurt myself. It's really hard. The biggest thing that I work on as a trader, that I've been working on for myself over the course of the last 2 years now, maybe 3 years, is just not having any mistakes ever. And it's really hard. Not ever deviating from a game plan ever, and I keep track very specifically of when I don't. And I've hit the point now where, and I'm really proud of this progress because for a long time I was nowhere near this. I feel like I make a mistake every couple months. I make a mistake, a quarter even, something like that at this point, which I still want that to be less. There should be 0 mistakes ever. But it's obviously really hard. And part of it is knowing yourself. Knowing when you're not feeling well, or you're hungover, or you were up all night, or you got into a fight with the wife or the girlfriend or the boyfriend or whatever that could be, kind of negatively impacting your thought process there. So you really need to be able to kind of know yourself, and that's been some progress that I've made also, is when I'm not feeling it, I don't trade nearly as much, or I trade significantly smaller. So, I'm really happy to hear about your overall progress. I'm glad that you didn't finish with the bigger loss today. I'm glad you were able to fight back a little bit, but just work on kind of recognizing ahead of time if you weren't able to do your research properly, you're not feeling it, you got to be able to step back or even completely step away. Whew. From Mark D, Qs are in a bearish channel. You're referring to this? What are your thoughts on breaking higher? My current thought, which I will game plan, that upper line will be resistance. We have also we have OPEX on Friday. Yeah, we do have OPEX on Friday. That's a big one. I see you calling this a bearish channel. I don't fully agree with you, to be honest with you. You could also make the argument that this is a bullish descending wedge off of the higher low that came in from December versus October lows. That we broke up. We have a higher, on a big picture here, we have a higher low and a higher high. And since then, we've built out like a descending channel, or you could almost call it a descending bull flag, in the most relatively strong sector. Now, will that act as resistance? Even a bull flag even has resistance. So I think that this is the strongest stuff that's out there. The question that I'm asking myself is, will we see a round of mean reversion at some point? Because we saw the opposite, right? For a while before this bank blow up, the IWM was the big leader compared to the Qs. And then we began to see some mean reversion where the IWM weakened a little bit, the Qs were stronger, so we were able to see that come into play. And now it's the opposite. This IWM is brutally weak, retesting the December low here, whereas the Qs are impressively strong, don't even look like anything has happened, and are extremely far away. The December low is 260, we're trading at 297. If the Qs were trading where the IWM was, or is, I should say, we'd be near 260. It's an incredible amount of relative strength. So can this, upper channel band act as some resistance? Of course it can. You know, in the same way, but I think it's more like I think it's more in the same way that a bull flag has a resistance channel. And again, you know, even bull flags, bear flags have probabilities of failure that are decently high, probably somewhere between 25 and 40% or something like that if flags fail, if I had to take a guess without statistical evidence behind it. So that's the thing right now is can the IWM recover and work its way higher? If it does do that, will it be with IWM relative strength and Q relative weakness for mean reversion? Or, you know, can the IWM continue to balance but the Qs maintain that strength and have a complete and utter breakout? Or does this weakness in the IWM persist to a degree that it eventually causes these Qs to fail and pull back? Those are the, I don't know the answer to any of those questions. Kind of wait and see. We'll just take it one day at a time. But for now, the Nasdaq's been very relatively strong, and I think that it looks pretty bullish. From Rex, I took Tesla inside 5 around 10:45. Okay, I really hope you got more to go with this than just the inside 5, because I don't like inside 5s really at this time of the day, but knowing you'd probably do. So let me read everything else you have to say. The 15-minute almost caught up, right? I don't even need to type up my 15 to see it, but you can tell just based on the 21 almost being there. The 21 on the 5. The 15-minute almost caught up. The 15-minute is flagging. All right, let's take a look at the 15. Yep. It was 10:45, I think you said. For sure. Would you say that it was a bad trade, or I should wait for the 15-minute to actually catch up and, you know, trade that inside 5? But at the same time, the market was ticking high. Tesla was not, so it showed a little bit of weakness. Sometimes I feel like I always overanalyze the market and do the wrong thing. I also took that Amazon at 10:20. All right, so as far as Tesla goes, it kind of goes back to the question I was saying earlier when you don't have every layer of probability on your side. I'm not going to tell you to not take this trade, but you want to recognize that your 15 minutes not there yet. You want to recognize that it's post 10:30, so in my opinion, you're outside of the most optimal time of trading. So that begins to kind of dampen your success rates there. The daily chart, like we mentioned earlier, I think is also a piece of information that was kind of against the trade. But I still think it's a valid trade. The market's acting strong, Tesla's acting strong, it's flagging, using it inside 5 for execution when you like other things. I would just say it's probably a trade to take with a little bit less risk, but not a trade that you should necessarily avoid or a bad one. Amazon at 10:20. Ooh, nice. But I'm not sure what's the right stop, as I suppose the correct out was the 10:10 low on the inside 5. You could use the second inside 5 low, 10:15 low. You could even use the 10:20 low, but I like probably the 10:15 low better. That's the tighter inside 5 there. From Jingwei, I went through the 30 in 30 days training session. One of the sessions, you talked about how you can specify order routing to earn fees on your trades. Do you have time to show me? I should have my T3 account set up tomorrow as I pass the Series 57 on Monday. Congratulations. Done with compliance training and wired my initial contribution. Sure. So there's 2 training program classes, I think. One is this like 30 in 30 days. I don't think I made that one. And then the other one is my training program class, which is within like Derrick Oldensmith training. I've never looked at the other one that they give, to be totally honest with you, but I still know a good bit about order routing, and that's what we talk about. And again, if you haven't had access or looked at my classes yet, I think I get into it in my tape reading class. I mean, I can just give you a very simple thing here on how routing works. Just a very brief overview. If you provide liquidity to the market, the exchanges pay you. If you take liquidity from the market, you pay the exchange. The most important thing is always to do the right thing for the trade that you're involved in. Don't be cheap. Don't trade incorrectly just because you're trying to save on a spread or you're trying to make the difference that is tenths of pennies on an execution cost. But again, very briefly, if you put in a bid, so right now I got a bid in Siri at $3.76. If the market comes down and prints my bid, NASDAQ, which is who I routed to, an SDQ, will pay me. I don't remember what the number is. I really don't remember what the number is right now. But they'll pay me for doing that. Whereas if I were to take liquidity, so right now the inside offer is $3.54. If I were to use a market buy during market hours, or I were to take my bid and cross it over or above the inside market, if I right now press enter, which I'm not going to do because I do not want to buy Siri, I don't even understand how this is a company, I would get filled instantly at the inside offer, but I would be taking the liquidity that's posted. So right now there's 100 shares at $3.54. 100 shares at $3.54 on NASDAQ. If I press enter, I'm set to route to NASDAQ. My 100 shares here will take that guy. This person right here will get paid, and I am the one who have to pay. NASDAQ will pay him, I pay NASDAQ. The way that the ECNs and exchanges make money is the difference between the two. The amount, every transaction is a liquidity provider and a liquidity taker. The amount that they pay the liquidity provider is less than what they charge the liquidity taker. They keep the difference. So that is how that works. That's the brief answer. I could get into more detail in another afternoon meeting on a different day if you'd like. Also check out the intro to tape reading class I have in my training program where I get into some details of it. Thoughts on JD long term? I like the company. I don't like the chart really here. It's down into this $40 zone where it's bounced from traditionally in the past. It's extended to the downside. I'm in it. I'm looking for a bounce. It's been frustratingly relatively weak even compared to the other Chinese names recently. But I like the company. It's very heavily used in China. I thought that last earnings report, even though they sold it, was okay. So I'm looking for a bounce back in this thing to 43 to 45, maybe 42.50 to 45, somewhere in that zone. We'll see what happens. These Chinese names have gotten so much more difficult to trade because of the Hong Kong ADRs have made them so much gappier. So I'm long JD, I'm short PDD. I'm much heavier in my PDD short than my JD long. In the China space. One man's flag is another man's bearish channel. All right, it looks like I got through everything. If you're watching on the YouTube, give me the thumbs up. And we'll call it at that point. So have a fantastic night, everybody. See you all tomorrow.